Our guest is Dennis Gartman, economist and author of the Gartman Letter. Dennis, good morning.
Good morning.
A lot to talk about here. Let's start out with gold. What's behind this increase here up to 1247?
Well, first of all, you're at new highs here against for the dollar. You're also at even stronger new highs for gold in terms of the euro, for gold in terms of sterling, and now for gold in terms of yen. You're seeing the world ostensibly just shunning currencies everywhere and turning to gold as a reservable asset. This has been something that's been going on for months. I see no reason to think that this is going to change. I am not a gold bug. I don't like the gold bugs. I don't think the world is coming to an end. But gold, nonetheless, is the immutable asset, and people are moving towards it.
Well, hadn't gold for a long time here lost its sort of status as a gauge of fear?
I think that it really has lost its gauge its sense as a gauge of fear. I think it's simply that people are looking to gold as a sense of stability. They're looking to gold as something, an anchor of sorts. I don't think it's a fear gauge. I think it's a sense of ennui gauge. I don't know what else to do, so I turn to gold is the investor's attitude at this time.
One of the other stories this morning, Dennis, sterling is down below $1.44, $1.43.96. This is after Fitch Ratings said the British fiscal challenge is, quote, formidable. Is that indicating a cut in Britain's credit rating?
Well, I think it's coming, but first of all, let's think about the rating agencies themselves. These people find themselves in a very bad position. They have no choice at this point but to go on a downgrading frenzy because they didn't downgrade anybody for many, many years. Now they're being keel-hauled for all intents and purposes. So to think that they're not going to go out and discuss the fact that one country after another needs to be downgraded or needs to be shown to be in a difficult position would be folly. Of course they're going to do that. I'm not sure that the UK is any worse off this week than they were last week. I think that Fitch and Moody's are a lot worse off this week than they were 2 months ago.
Well, Dennis, also on the agenda today, strikes in Spain in reaction to the government's austerity measures. Will it make a difference?
Strikes in Spain? I'm shocked that there would be strikes in Spain. Of course there are going to be strikes in Spain, just as there were strikes in Greece. The austerity measures that the Europeans are putting into effect, that the ratings agencies are now demanding of them, and that the world capital markets are demanding of them, are going to force the labor unions into the streets to strike. We had strikes in Greece. We're going to have strikes in Spain. Guess what? We'll have strikes in Portugal. We're going to have strikes in Italy. There'll be strikes in the UK.
So do we see the euro continue to decline as a result?
It's not a pretty sight for the euro. No matter what they do at this point, the euro is under pressure. If they tighten monetary policy, the euro will go down. If they ease monetary policy, the euro will go down. It's just that sense. It's just that period of time. The euro is heading towards parity and beyond, and it's long overdue.
Briefly here, are we going to see parity this year?
Well, that's a whole other question for a whole other time, but the speed with which things are falling apart right now, certainly possible.
Our guest is Dennis Gartman of the Gartman Letter. Dennis, we don't pay enough attention to agriculture here in New York, but it's a major, major industry in the U.S. Planting is done for the spring. What kind of shape is the national crop in?
I'm going to tell you right now, this is going to be one amazing crop that's in the ground this year. Thus far, Mother Nature has really treated America's farmers extraordinarily well. They had plenty of moisture to put the crop in the ground. They've had great sunshine. They've had good moisture thus far. They've had availability of any amounts of fertilizer that they need. We haven't planted as much corn or soybeans as we did previously, but honestly, we're going to look at record crops this year, barring some change in the weather that would occur after July 4th, and that's the turning point in the crop year for corn and soybeans. What happens after July is when you make the crop. But right now, you're talking record crops for corn and soybeans, far beyond what anybody would have thought, and it's putting downward pressure upon those prices.
Right. That does mean low prices the farmers get.
Absolutely. But if you're getting $1 or if you're getting 50 cents per bushel less, but you're getting 50 more bushels per acre, you really don't care.
Dow Jones Industrial Average at 10,047 after falling 115 yesterday. It's at 98.16. Where do we go from here, Dennis?
lower still. This is not a very pretty environment for equity investors at this point. They're already looking at, 6, 7, 8% losses for the course of the year, depending on which stock market around the world you're looking at. I have my own international index, which is down 8.9% for the year thus far, and I think prices are probably still going to continue to move lower. We're revising downward guesstimates as far as earnings for the next half of the year. We're probably going to revise downward ideas as to how strong the global economies are going to be, and as investors do that, they're marking down stock prices. I think it's the start of a bear market. I hate to say that. I don't like being bearish. Have been for some while and continue to be that way.
So briefly here, what do? Just park it in T-bills?
As much as one doesn't like it, that's where you have to go. You've got to go to the 2-year note. Right now, it's not a matter of, it's the old story. It's not a matter of how much my capital returns. I just want my capital returned. And I think that's what you have to do. You have to play defense. You have to be, if you're going to be long, make sure you're long very defensive stocks. Make sure you're long low beta, high dividend payers. If you're going to be short, make sure you're short high beta stocks. That's the way to trade in a bear market.
Dennis Gartman, economist and editor of the Gartman Letter.